Greetings everyone. Just getting the stream started up here, making sure everything's optimized before we begin. Just testing the audio, microphone check, 1, 2, testing audio. Testing the audio again, microphone check, testing audio. Okay, welcome everyone. So we're going to start the live stream, go over the as-is contract is what we're going to begin with, and then from there we're going to go over maybe a listing contract or two and take it from there to see where we are on time. So to begin, let's go with the as-is residential contract for sale and purchase. Let's zoom out a little bit. I'm just going to take a look to make sure this is easily viewable. If you're watching on a phone or if you're watching on a desktop. Give me a moment to check it out. Yes, this looks pretty good. Hopefully the audio is not too loud, but I think it's at a good volume, so we'll take it from here. So we're going to do a tutorial on the as-is residential contract for sale and purchase. This contract is, the contracts we're discussing here is in the state of Florida, so I'm not sure about other states, and today we'll be discussing and going through a tutorial of the as-is contract and my professional advice and recommendation on how to fill out this particular contract. So let's begin. The beginning of the contract is fairly simple. Just put in the seller and the buyer's name. So let's say the seller, let's put some placeholders here. Just put the seller's name there. If there's multiple sellers, you could put all their names there. If it's a company name, same thing with the buyer, you should put the buyer's name. Now the next part here is the street address. I've seen a lot of realtors, not everyone, but sometimes realtors will put in an address and they'll not include the city or the zip code or the state. With this contract, you don't really need to put the state because it says it down here, Florida, and you're going to write the county that it's located in. So let's say this property is located in Broward County. So you could just put the county there and it's in Florida, but when you're writing the address here, I've seen a lot of mistakes where the zip code will be left out. Write everything it's asking for, the full street address, the city, and the zip. There's really no excuse to not include all of that, so definitely fill all that out, make it easy and do it the proper way. That's just my professional advice. So let's just put a placeholder here. Don't leave out the zip code, and don't leave out the city either. Well, let's say Fort Lauderdale, since we wrote the counties in Broward. So I see a lot of times the city gets left out, or the zip code. You're supposed to include all of that information as it says here. So fill out the full address with the full city name and the full zip code. And the property tax ID, you could get that from the public records. If you have questions about that, you can feel free to reach out and contact me, and I'll explain further about that. But you get that from the public records. So if it's in the Broward County Public Records or the Miami-Dade County Public Records, Orange County, you pull it up from the public record, then you put the usually called the parcel number, tax ID number. Usually it's called the parcel number, but there's different names for it depending on the county and where you're looking up the information. So let's just put a placeholder there right now, and you'll put it there. The next part here we're going to discuss is the legal description. So the legal description, if you could fit it in this little paragraph here, go ahead. You could get usually the actual legal description is usually very long, and you usually got to get it from the deed or something else. Usually the public records only has like a shortened version, so it's okay to put the abbreviated or shortened versions in this contract here that you'll get from the public records. It's acceptable. The proper way, if you want me to give you like the proper advice, I guess supposedly, is that you're supposed to get the full legal description, and usually you can't fit it in this paragraph, so you could write something like C Exhibit A. Then you could have a separate document with this contract that's titled Exhibit A, and have the full legal description written there. Most of the time that isn't done. I've done it a handful of times, depending if I have the full legal description. But most of the time you just fit whatever is in the public records into this particular paragraph. If what's in the public records can't fit in this paragraph, then I would usually write up an Exhibit A, or a lot of times what I do, depending if there's any additional terms, I'll scroll down to the end of the contract. So let's just do that real quickly. Let's go all the way to the bottom, the last page. So I would go down to the additional terms, and sometimes I write it here. Really the proper way is to create a separate document and just say see Exhibit A, but I have written it down here from time to time, but really it's not the best way to do it. Usually if you're going to write up another thing, just create a separate Exhibit A and just put the legal description there. So let's go back up to the top here, continue filling out this contract. So that would be my recommendation. You could fit the legal description in here or create a separate exhibit. So let's get down to the next paragraphs. Personal property included. So anything that's not included, usually this paragraph covers mostly everything. As you can see here, unless excluded in paragraph 1E or by other terms of this contract, the following items which are owned by seller and existing on the property as of the date of the initial offer are included in the purchase. And then, usually, not always, but usually the property will come with the range, ovens, refrigerator, dishwasher, garbage disposal, ceiling fans, light fixtures, any of the fixtures, drapery rods, blinds, smoke detectors, garage door openers, thermostats, maybe even TVs, televisions mounted on the wall. I've definitely sold properties with televisions, security guard gate. And if it's not included in here, you could include it down here. Mailbox keys, storm shutters. A lot of things are listed in this paragraph, but if it's not listed in this paragraph, you could put it here, such as, let's see, did it include microwaves? So range, oven, refrigerator, dishwasher. So it doesn't look like microwaves are included, so you could write microwave in there. You could also write, maybe there's really any other type of personal property or anything like that. So this is what you would write in this paragraph. You could also, if there's, like, you're selling furniture with the property, maybe there's a couple of couches. If there's a few things that you could fit in here, maybe there's just one couch and a chair that's being sold or a dining room table, you could put it here in this paragraph. But maybe there's a full inventory list, like the house is being sold completely furnished, or a lot of furniture is being sold with the house. Then, once again, you could create a separate exhibit. So see Exhibit B. Then you could, furniture inventory list. So you could create a separate Exhibit B, call it the furniture inventory list. Then you could list, how many things are on there. 3 couches, 2 chairs, dining room table, 5, 6 chairs in the dining room, things like that you could list there. Maybe even I've seen kitchen equipment being sold on a property. There could be utensils being sold, blenders, smoothie machines, coffee machines, espresso machines. So you can make that in a separate list there and include it there. That's one good way to do that. So that's what I would recommend as far as if you're doing a separate inventory list. Now the paragraph here, which it says Part E, the following items are excluded from the purchase. That's where you would put, if there's like, for an example, if there's a refrigerator in the garage, you could write here, the refrigerator located in the garage, or the extra refrigerator located in the garage, or the extra freezer in the garage. Maybe there's a certain type of like a ceiling fan in one of the rooms that they want to take, the seller wants to take with them. Anything like that that's going to be excluded, you could fit it in this paragraph. Or once again, if you need to, you can write C, Exhibit C, make up another exhibit, and you could write something like excluded inventory list. So that's where you'd put here. You could even put something like this. I know I'm getting into quite detail with some of these beginning paragraphs, but there are situations where I have been asked, and that's the whole purpose of this live stream, is to go into really extreme detail on every single paragraph of as many scenarios and situations that I've seen and can think of. So that's what you could do in a situation if you're selling a house furnished, or if there's a lot of things being sold at the property, furniture, kitchen equipment, or anything like that. If there are things being excluded from the sale, this is how you would fill it out and how you would put together everything. So simple enough. If you need to make these separate exhibits, you'll do that, and then make the list, inventory list, if you need to. Same thing with the legal description. But that's pretty much the beginning of the contract there. Let's move on to the next major paragraph, which is purchase and price and the closing information. So from here, you put the purchase price up top. So let's say this particular example, we're selling a $500,000 home, so we'll put $500,000. And then the next paragraph, Part A here, is the escrow deposit. I usually always pick box 2 here, and you can leave it blank. I personally always recommend to never leave things blank, always fill it in if you can, but that's just my professional opinion and advice. So I usually 2 to 3 days. 3 days is more than generous enough. If somebody can't make the deposit within 3 business days, it doesn't sound too good in my opinion. So, but maybe there's a unique circumstance that need more time. It depends on the unique situation and what you're negotiating. But in most situations that I've seen, 2 to 3 days is plenty of time. So that's what I would recommend, that you click the second box and write 2 to 3 days here. You can't click the first box if they're going to accompany with the check, or they make the wire deposit that same day. I usually like to be a little courteous and give somebody at least 48 hours at minimum to make the escrow deposit. And as far as escrow deposit amounts, this is really at your sole discretion and the seller's choice. Sometimes the sellers may want more, sometimes they're willing to accept less. Just to give my personal and professional opinion as far as what's a good escrow deposit amount, it depends. If it's like a cash offer, so let's say it's a cash offer for this price of $500,000. Me personally, I wouldn't want a escrow deposit of any less than $50,000. Now this is if it's a cash deal. If somebody's going to be paying cash for the property, it's $500,000. The minimum I would want down in escrow is $50,000. I'd probably want more than that, but $50,000 is probably the minimum that I would accept. Now, if they're financing, let's say they're doing an FHA loan, FHA loans, usually the reason buyers are getting an FHA loan, not always, but usually, is because the down payments are usually much smaller, and they could end up purchasing a property and not have to worry about coming up with a huge down payment like 20% of the sales price, 10% of the sales price. Sometimes they could get it for 2-3%. Sometimes they'll go as high as 5%. So usually on a FHA loan, I'll be willing to accept a little bit less. In this particular situation, if it's $500,000 and they're doing an FHA, I would typically like to see, I think like 5,000, 3 to 5,000 is probably like the bare minimum I would accept. I'd probably ask for at least 5,000 in escrow if it's an FHA. If it's conventional, I'd probably ask for a little bit more. Once again, conventional loans, I believe you could still do conventional loans at the time of making this video, at least for like 5% down. Sometimes people put a little bit more, up to 10% down. But for a conventional, I'd probably ask for a little bit more, depending on what the down payment is. So I'd probably go somewhere between like 10 to 15,000, somewhere around there. It just depends. But this is just my personal opinion. Of course, you and your clients can change this as they deem fit. Maybe you feel that 3,000 is good enough, even if it's conventional. If somebody negotiated with me and said, "Oh, they're only putting 5% down, it's conventional. Can they only put like 8,000 into the escrow?" I may consider it. Just depends on the situation, the negotiations, and how things are going. But that's just my personal opinion. If it's cash, I usually like to ask for this decent down payment. When it's a conventional or FHA loan or a VA loan, VA loans, at the time of making this video, you could get VA loans can be done with no down payment. So sometimes I might not ask for really too much for a VA low down payment, maybe a couple $1,000s, up to $2,000-3,000. It just depends really. But those are just some numbers for me to give you my professional opinion and advice as far as what to put as a down payment. So let's say for this example, we're going to leave it at $15,000. The escrow agent name, this is where the escrow monies is going to be held. A lot of times it's put with the title company. Let's say the seller or the buyer is choosing a title company, or wherever the buyer wants to put the escrow money down, they could put the title company's information here. If your brokerage does maintain an escrow account, you could put your brokerage information here. So let's say that our brokerage is going to be holding the money in escrow. You could put the brokerage name there. You put the address here. And then you put, you could put the email address of the brokerage there, phone number, fax if that's applicable. You put that there basically. So, but most of the time, put the title company's information here. So, that's personally how I always recommend it, is wherever you're doing the closing, just to have, because they're the ones who are going to be getting the funds and doing everything. So I like to have all the money in one place at the same time. But that's just my opinion. You could have it with your brokerage. You could have it with the other broker. You could have it with a separate attorney to hold escrow. I usually always like to put it with the title company we're doing the closing with. So we'll just leave this as a placeholder here, and you'd fill out this information as necessary. The additional deposit, I don't always fill this out. Sometimes I do require an additional deposit. Depends on the nature of the deal and what's being negotiated. So you could definitely have an additional deposit to the escrow agent. That's where you would fill this out. When you make that additional deposit, it really just depends. I've seen situations where the inspection period is the buyer has 15 days to inspect the property, and after the inspection period, if they're going to proceed forward, then I have them make the deposit, the second deposit, or additional deposit after the inspection period is completed. So let's say the inspection period is 15 days. You go right after 15 days. If they're not canceling the contract due to inspections, then make an additional deposit into the escrow. Let's say, for this example, it's another 5,000. It could be anything. that's once again for you to discuss with your clients and to negotiate from there. But a lot of times, sometimes, there is a need for an additional deposit. It just depends on what you're negotiating. Sometimes there's a small deposit initially in the beginning, and then after the inspection, a bigger deposit's put down to show, good faith and that the buyer is serious, very serious about moving forward with the contract. Maybe the buyer just needs more time. There's a variety of situations, but regardless of what the situation may be, there's a bunch of unique scenarios I could describe or we could think of. But if there is a need for an additional deposit, you'd put it here. When do you do the additional deposit? It just depends on when you're agreeing upon. It could be in another 5 days, it could be in 10 days after the inspection. So you just put the date amount here. I've seen realtors, they try to write in here like 10 days after inspection or something. Like just put the date amount, just put a number here. That's what this paragraph or this particular section here is for. You just put a number. So if in the as we go down the contract, we're going to see the part where it talks about the inspection period. You have how many days you put there. So if you put 15 days down there and you want the additional deposit to be made after the inspection, just put 15 days here. There's no reason to write anything extra. It's just taking up more space, making things more complicated, and it's just not the right way to do it. You're supposed to just put a number here. So that's what you would do. The next part here, you can put out the financing. Let's say if it was a conventional and they're financing 95% of the amount, then you can put that there. And the program I have, it does the numbers already, so it automatically does that. But that's where you'd put that here. So let's say they're putting 5% down and they're financing 95% of the loan. Then you put that there, 95%. It does the equation already for you. So the balance to close, they're only going to need $5,000 because it takes in this these deposits that you put in here as well. At least the program that I'm using. So if you didn't have those deposits, it adjusted accordingly. But you'll have to do the math on your end if you're just filling this out by hand. So under these particular terms that we've written here, with a $15,000 deposit and a $5,000 additional deposit after 15 days, financing 95% of the loan, they're going to need to come up with an extra $5,000 to close. So that's what the buyers are going to need to close. Then they have the other Part D, which is other here. If there's something else going on, you'd write it in here. Maybe it could be a third deposit. You could write that a third additional deposit's being put here to be made after maybe 20 days. That's probably the only thing I've actually ever written here in the other part. But if there's something else going on, talk to your broker to see if you could put it there as far as what you're looking to do. But the only time I've ever used this Part D, the other, is for like if there's like a third deposit. And I've rarely done that. Usually the second deposit's all that's needed. You just have it done here. But I've had situations where there's been a third deposit made. So it just depends. But that's where you'd put it there. For now, we're just going to skip over this. Like I said, talk to your broker if you have any questions or something else you're looking to do there as far as the other paragraph. Time for acceptance. This is where you'd put a date of when the contract needs to be executed by all parties. Otherwise, the as you can see here, this offer shall be deemed withdrawn, and the deposit, if any, shall be returned to buyer. If not signed by buyer and seller, and an executed copy delivered to all parties on or before whatever date you put here. So the offer will be deemed withdrawn if you if everyone doesn't sign by the specific date. So let's say the date we want everyone to sign by is let's see, today's the 7th. Let's say we want everyone to it expires by the 10th. So let's say the buyer made a deposit and decided that they put a deposit with the title company and they sent over this offer. If the seller doesn't sign it by the 10th, let's say the seller ends up signing it on the 15th, the offer shall be deemed withdrawn. So the buyer could get their deposit back and not move forward with this particular property if they want to, under those circumstances. So really everyone should sign by the date. So you should change this date. If you wrote the 10th here, everyone should sign by the 10th. If everyone's going to sign on like the 13th, the 15th, then you should change this date and redo the whole contract. So yeah, that's the time for acceptance. Pretty simple paragraph there. Next part we're going to talk about is the closing date. You just put whatever the closing date is here. A lot of times the way I like to write it, so let's say the closing date, let's say closing is going to be on or before the 1st of July. So let's say this contract is being signed on the 10th, and we want the closing date to be on or before the 1st. So you can write on or before July 1st, 20. That's how I usually like to write it. Just in case, everyone's ready to close sooner, you could close sooner, or it just looks better like that. So you could close either on the 1st of July, or you could close sooner. Let's say everyone's ready to close by the 30th of June, the 28th, so you could close sooner. So this is where you put the closing date. The next part's here to fill out. Most of these paragraphs is just to read. You have this box here, part B, you could fill out. Check if property is subject to lease or occupancy after closing. You would, if this applies to your contract, if property is subject to a lease or any occupancy agreements, including seasonal short-term vacation rentals after closing, or is tenant to be rented or occupied by third parties beyond closing, then you have to disclose in writing of the written leases and so forth. This is mainly if after the if the new buyer is purchasing the property and there's a tenant in there, it's being rented out already by short-term leases, vacation rentals, then this particular paragraph would apply to there, because someone holds a lease on the property. The seller should furnish the new buyer with copies of these leases, because the current tenants hold a lease on the property. So even though the new buyer purchases the property, the buyer can't just kick the tenants out if they hold a lease on the property for another 2 months or whatever it may be. The tenants still have possession of that property, and you have to respect that lease. So if that's the case, you click this box, and the seller should furnish the lease contracts to the new buyer. If not, you leave this empty. For the purposes of this particular example, we're just going to skip over this and say the property is vacant. But if you have questions about that, feel free to contact your broker to discuss further there. Next part, assignability. So this is the part where you would put if the buyer wants to assign the contract. So once again, I don't recommend leaving anything blank, even though the default thing here is if no box is checked, then buyer may not assign this contract. I don't recommend leaving anything blank, as I said before. So if the buyer is not going to assign the contract, then you check mark may not assign the contract. So that means the buyer who is purchasing the property is the one who's going to be purchasing the property. Now, I have seen under circumstances may assign the contract but not be released from liability under this contract. This happens quite a bit, especially if maybe an investor or the buyer wants to put the property in a company name or a trust name. That's where you would click this box. So say, for example, you're the buyer and you want to purchase the property, but let's say you want to own the property in a trust name, like a family trust. Then you could check mark this box saying that you won't be released from the liability of executing this contract, but you want to be able to assign it to your family trust. Or maybe you have an LLC. This is going to be another one of your vacation properties for passive income. Then you could assign this property to one of your LLCs, or create a new entity to put the property name in. That's most of the time what I see checked there. I always don't advise you check the first box where the buyer may assign the contract and be released from further liability. I never really recommend that. Have I seen it done? Yes. Does it work? Yes, it is an actual thing. It can happen. I don't think that's good terms for the seller. A lot of times I've seen this when people are trying to like wholesale properties, and they want to just assign the contract to their investors and then just be released from the contract, and their investors compensate them. I'm not really sure how that works on that end. But I usually always don't advise doing this, and I've never been in a situation where I'm working with like investors and they want me to assign contracts to them and be released from liability. It's just, you know, not things I've ever done. I've done many times where I've had individuals where they assign the contract to another entity or a family trust or something like that, and they're not going to be released from liability. So I usually do the second or the third box. I don't recommend using this first box, but it does exist. It can be used in certain situations. I personally don't recommend it. It's never really been, it just doesn't, it's not very favorable terms for the seller, and I've never worked on the buyer side where I'm looking to do something like that. It just never done it. I always box 2 or box 3. So let's say for this particular contract, we'll check box 2. Let's say the particular buyer wants to wants to purchase this property and they want to put it in a family trust name. So they won't be released from liability. They'll still be fully liable for executing this contract and the terms of the contract. But once, you know, closing happens, they're going to assign the contract to the family trust or an entity. So we'll leave it like this and move on to the next part. Financing. So you would write here what type of financing is being done. Is it a cash deal? It's very simple. You just check mark box A and that's it. It's a cash deal. However, if it's financing, you check mark box B, and then you write how many days until to have the closing be done. The contract is contingent upon within 30 days after effective date, buyer obtaining approval of A. You check what type of loan it is. Usually for conventional loans, I give it 30 days, 30 to 45. I never usually give more than 45 days. If it's FHA, I'll usually give it 45 days because sometimes the FHA loans could take a little bit longer. Same thing with the VA loans, they could take a little bit longer, so I like to give some room there for an extra time if needed, 45 days. If it's conventional, I usually like to ask for 30, but sometimes I'll give 45 depending on the circumstances and if the buyer just needs more time. So let's say for this particular example, like I said before, I don't like to leave anything blank, so we're going to leave it at, let's say 30 days. You could add more or less. It could be 60 days. It's really at you and the seller's sole discretion. And let's say this particular loan is going to be a conventional loan. So you check mark conventional. Then the next part here, most of the time that I've seen lately, it's usually a fixed loan. But if it's a different type of loan, like the ARM mortgages, adjustable rate mortgages, which I haven't really seen anyone get any of those in a long time, but if you are going to be doing any of those type of loans, then you would click one of those boxes there. Let's say for the example purposes of this video, it's going to be a fixed loan, which is the most common type, but there are other types of mortgages, and we'll just leave it at that to keep it simple. And then usually this part here, a lot of times I leave these blank, but you can fill them in. It's really not that big of a deal. I like to fill in the top one up here, mainly this, the 30 days conventional. If there's an other, like you're doing hard money lending, you'd click the other button and you could write the other type of lending that you're doing there, like a hard money lender. That check mark fixed here. And then you could write the interest rate there. Most of the time I leave this blank because the next parentheses paragraph discusses that pretty much, so I never really fill that in. Then the same thing with the next part here, I usually leave this one blank. And then as far as buyer shall make application for financing, this you could leave blank as well, but you could also put 5 days. I usually, like 5 days is more than enough. I'd prefer the buyer start the whole process immediately. So you could leave 5 days. A lot of times I like to put 3 days. 3 days, 48 hours, 72 hours is usually a good amount of time. You usually don't want to do anything, like 3 to 5 days is more than enough. Just keep it simple here. If the buyer is not making an application for financing within 3 to 5 days, I don't know, that doesn't sound too good to me, but that's just my professional opinion. So really the buyer, if they sign a contract, let's say today's the 7th, they should be the next business day getting things together with their lender to start the financing process. They should do it the next day, in my opinion. But 3 to 5 days is good to put here. I wouldn't recommend any more, but that's at your sole discretion if you're going to put more or less. So let's move on in the as-is contract. I believe the next parts is mainly just paragraphs for you to read. You have these boxes here. Most of the time, these are never really, when I'm filling out the contracts, if this does pertain to one of your deals, feel free to contact your broker and so forth. Most of the time, I usually skip over this. There's usually not an assumption of an existing mortgage most of the time, but it does happen. Or purchase money note or anything like that, but that's very unique situations. Contact your broker if you're going to be filling that part out. Closing costs. So these are the costs to be paid by seller and buyer. Most of the time, this is just to be here and for everyone to read for disclosure purposes, but a lot of times if there's a transaction fee that your brokerage charges, like our brokerage, that's how we pay our agents 100% of your real estate commission. We only charge a transaction fee. Our agents can choose to take the transaction fee out of their real estate commission. So if you're on the monthly plan, you're paying only a $69 transaction fee, so you could take the $69 out of your commission. Or a lot of the agents that I work with, they add the transaction fee to their client. So if they're working with the seller, they'll put like $69 brokerage transaction fee. I think I spelled that incorrectly, so let's fix that. So you could write something like that. You could write also, like usually I write $69 transaction fee, Nizz Realty Inc. So you could write something like that. But if our company is representing the seller, then you could just leave it like that. But that's how a lot of our agents would do it if they want to have their client pay the transaction fee. And some agents, they'll charge more of a transaction fee. So if you're with our brokerage, we're only charging you a $69 transaction fee. Some of the agents I work with, they might have to do a lot of extra work for their client, and they'll explain to their client, like, because of all this extra work, I'm going to charge you an additional $500 transaction fee. So you could charge your clients that here, and that's where they'll pay the additional transaction fee. Then if you're with our brokerage, our transaction fee is only $69, and the agent will keep the difference because of the extra work they had to do. Maybe there was some extra photography or showings that they had to do, or it could be anything. It's any type of extra labor that you had to do. But this is where you would put that as far as a transaction fee. If there's anything else that you want to put, you could put it in the other section here, but most of the time I usually only see the transaction fee put here. Same thing with the buyer. If the agent who's working with the buyer, maybe their brokerage charges a transaction fee, a lot of the times they'll put it here, or they'll put it in the additional terms at the end of the contract. So let's say, for the purposes of this video, let's just say it's just a $69 transaction fee if you're working with the seller and you're a part of our brokerage. So moving on, title, evidence, and insurance. 15 days is good, so I usually just put 15 here. You could put more or less, but 15 is usually pretty good. You could read through this paragraph as you like, see what it explains. I'm not going to read through the whole thing, but 15 days is usually what I put there. Sometimes you could put more if you want, or you could put less. The next part here, this is another pretty important one. These paragraphs here. So what paragraph is this? I guess major paragraph 9, down here, line 168. This is where you're going to decide who is going to pick the closing. You know, is the seller going to designate the closing agent, or is the buyer going to designate the closing agent? If you're doing a property in Miami-Dade or Broward, you can click this third one here. I have seen that done quite a bit, but most of the time I recommend picking box 1 or 2, even if you're doing a property in Broward and Miami-Dade, but you could click this if you're doing a property down in South Florida and Broward or Miami-Dade. That's at your sole discretion. Most of the time, it's either the buyer is going to designate the closing agent and pay for the owner's policy and charges, or the seller is going to designate the closing agent and pay for owner's policy and charges. And you know, you could read through the rest of this. You know, I've had realtors, just to go into a little bit of in-depth detail about this. I've had other realtors, they always say, oh, this is the standard thing. Always, you know, the seller will pay and designate, or they'll say, oh, the buyer's usually doing this. You know, that's really opinions. Really, at the end of the day, every contract is unique, and whatever you put in the contract is what's going to be done. Sure, I'm sure there's things that are done more often than others, but every contract is unique. So if the seller is going to designate the closing agent, you check mark box 1 here. If not, and the buyer is going to designate, then the buyer will check it here, and they'll pay for the owner's policy and charges. It just depends. Why would the buyer designate the closing agent and pay for the owner's policy and charges? Depends. Maybe the buyer is getting a good sales price on the property, and the owner wants them to pay for that in return. It just depends. Every situation is unique, so it really just depends on the situation. It could also be that the seller will choose to designate the closing agent and pay for the owner's policy. I've seen a lot of realtors say that that's normally what the seller should do, is they should pay for their own owner's policy and charges, but each contract's unique. It really just depends. If you want further clarification on that, or for your current deal, I suggest, you know, contacting your broker to speak about it. This just depends. I usually pick one or the other. It really just depends. If you're working with a buyer, you know, the buyer could save some money by having checkmark box 1 put. If you're working with a seller, the seller could save some money by checkmarking box number 2. Really, it just depends. For the purposes of this video, let's just say the seller is going to pay for the owner's policy and charges and pick the closing agent. So then we'll leave it at that. And we'll move on to the next paragraph. So each deal is unique. It really just depends. Okay. So let's talk about the next paragraphs here to fill out. Part E, home warranty. If there's a home warranty, you fill out this paragraph. Most of the time I've seen non-applicable put here. But if the, let's say, buyer shall pay for a home warranty plan issued by, and you fill out here who is issued by, at a cost not to exceed whatever the cost is that it's not going to exceed. So if you're going to be doing a home warranty plan, most of the time I've seen it's either non-applicable or the buyer is paying for the home warranty plan. I normally don't see it with the seller paying for that unless under very, very unique circumstances. I think I've seen that only less than a handful of times where the seller will pay for that. So most of the time I see non-applicable, but if the buyer, usually the buyer is going to do it, then you'd fill it out here. The plan's issued by who at the cost not to exceed, and you fill that out from there. For the purposes of this video, we're going to leave that at non-applicable. The next part, special assessments. This just depends here. I've seen both of these boxes checked. Probably more often I see box B checked if there's like a special assessment. So let's say for example, the property's in a condominium, and let's say the condominium's doing a complete renovation to the roofs of the building. and they did a special assessment, so all the sellers have to pay a special assessment for the roof repair. Under those particular circumstances, oh, thank you. Appreciate the nice comments in the chat. I do see you. But yeah, as I was saying, most of the time, if it's a, like say a condominium, there's been a special assessment for the roof, the seller will pay it in full at or closing, but that's not always the case. I've seen negotiated situations where it'll be part A, where the seller shall pay installments due. So let's say the repairs to the roof is being paid in installments. Let's say it's every month there's like a $500 installment payment. So the seller will pay every month $500, but once closing is complete, the buyer is going to take over the special assessment and start paying that $500 every month. So in that particular situation, the buyer will take over the installments. And I've seen both these check mark. It just really depends. Either the seller is going to pay the special assessments in full, if there is any, or everyone knows about the special assessment and the seller negotiates by saying, you know, we're selling the property at this price, but you're going to have to take over the special assessments once we actually close, and whatever is left due, let's say there's another $5,000 due in monthly increments of $500. At the time you close, the buyer takes over those payments and will make those payment installments. So let's just say for this particular example in this video, the seller's paying it in full if there is any special assessments, but this is to be negotiated depending on the circumstance of your deal. Once again, I'd recommend talking to your broker if you're going to be filling out one of those or have questions about it. But that's what that paragraph discusses. It's a pretty important paragraph and something very important to explain to your clients. If there is a special assessment that the seller knows about or the listing agent knows about, and you need to explain to your client if you're working on the buyer side. But same thing with working with the seller. They should understand this paragraph as well. So let's say the seller is paying in full, and we'll move on to the next part of the contract. I do believe most of the rest of the contract is just disclosures, so it's things to read through. I usually always you could put 20 here. You could even leave this blank. This is just talking about the flood zone. 20 is good. If you want to add more, you can, but I usually just fill it in 20 because I don't like to leave things blank if I don't need to. Then it's just disclosures, lead paint. You do need to do a lead paint disclosure. Maybe we'll discuss about that in today's stream, but for now we're just going to go through the rest of this contract. Property inspection. This is a pretty important paragraph here. So you'll fill out how many days the buyer has to inspect the property. Once again, this here is at you and the client's sole discretion. If you're working with the buyer, if you're working with the seller, it's what is acceptable to the seller. In most situations, if you're doing, like, I guess you would say a traditional sale, maybe someone, like in this contract, it's a conventional contract. Someone's maybe looking to purchase this property as a primary residence. They're doing a conventional financing. 2 weeks is usually a good enough time. So like 14 days, 15 days, as you see it says here, that's usually like a fair amount of time. You can do more or less. I've seen 10 days, 7 days. If somebody could get an inspector out there like within 2 to 3 business days, you could do something like 5 business days. Just depends on the seller. The only thing I could recommend about this particular paragraph and suggest is if you're working with the seller, you don't really want to have the property off the market too long. So 15 days is kind of a long time. I usually would recommend that the buyer has inspections done faster than that, like a week at most. I don't like to pull properties off the market for more than a week, but under unique circumstances you could add more time. Maybe there's a very thorough inspection that needs to be done, or something else. It just really depends, but I wouldn't recommend any more than 15 unless under very unique circumstances. Like if there's like some type of major problems with the property, or there's some other, like, maybe the property has a lot of acreage and there's a lot of ground to cover. You need to do some type of feasibility study, and maybe there's septic tanks or like a private well on the property. You need more time under those circumstances. Then I could understand why you might need more than 15 days, but 15 days should still be good, and you should be able to get all those inspectors out there fairly quickly. Once again, I don't like to take the property off the market for too long. So let's say for the example of this video, we're just going to put 7 days. You could change this as you deem fit. I've seen 30 days, 20 days. That's at your discretion. So we'll keep it moving to the next parts of the contract. I don't think there's anything else to fill out here. These are once again disclosures, things to read through of the as-is contract. Nothing to fill out, so let's just keep going until we find the next part and paragraph. You can read through these, so can your client, but there's nothing as far as a real estate licensee to fill out here. Let's see here. Talks about the 1031 exchange. Yep, there's nothing really else until we get towards the end of the contract. The addendums and additional terms. So this is another pretty important area. This is where you check mark all of your addendums. If it's located in a condominium association, you include a condo rider and check this box. If it's instead in, it's a single family home in a homeowners association, a community, with a HOA, you check mark box B. If you're including an FHA or VA addendum, you check mark this. Maybe there's an appraisal contingency. The property is built pre-1978, you definitely need a lead paint disclosure, very important. If the property is in like let's say a condo association for the housing for older persons, like a 55 and older community, then you check mark the 55 and older part right here and include that there. Maybe you have a post-occupancy addendum or sale of a buyer's property addendum, you could check mark that here. This is where you check mark all your addendums pretty much. One thing that I recommend, if you're ever, even if you're not working with the seller, if you're a part of our brokerage, it is a requirement of our brokerage policies manual that if you're working with any seller, you also include a seller's disclosure. So we always check mark this box here, other, and include a seller's disclosure. But even if you're working with the buyer, I'd recommend getting a seller's disclosure. It's just good for liability reasons, and it's just good practice. It's a very simple document to fill out. The seller just discloses anything they know about the property. A lot of times, if they don't know anything about the property, they just write "don't know" on the seller's disclosure. But it's a pretty important document. And if you're with our brokerage, if you're working with a seller, it is required because it's just for liability purposes, protects the seller, protects you and your license, protects our brokerage, so that everything has been disclosed, nothing's been hidden. It's definitely highly recommended to do a seller's disclosure addendum for any property that you're selling. Condo, co-op, single family home, duplex, always do a seller's disclosure. That's just my professional advice and opinion. But yeah, this particular, you check mark any of the addendums that you're including in your contract. Maybe you also have the licensee property interest. This is if you're maybe you're selling your own property, you hold a real estate license, you do need to disclose that to the buyer that you're selling your own property and you're representing yourself and you do hold an active real estate license. Then you check mark this box and disclose that there. There's a separate addendum for that. So for this particular addendum, let's just say there's an HOA and we're doing a seller's disclosure. And then down here in the additional terms, if there's any additional terms, you'd write that here. I'm not going to go over any specific additional terms. It could be many different things. The only thing I could recommend here is if you are writing something in here, don't make it complicated. There's a lot of space here, but once you start writing like a huge paragraph, multiple sentences, and things start getting complex, you're not really supposed to be writing and drafting these like complex things. That's where you probably need to get an attorney involved to take care of certain things like that. So keep it simple. Something, I'm not going to discuss what to put there. If you're part of our brokerage and you have something unique going on and you have a question about what to put here, I'll advise you. But other than that, the only thing I could say is talk to your broker as far as what you're putting in here. The only recommendation I could say as far as additional terms is keep it simple, like one sentence. Or if anything, just a couple of sentences, something very simple. Don't start writing like a whole paragraph and making things complicated, because you're not really supposed to be doing things like that, and you could run into some trouble. You start getting into the area of liability issues. So keep it simple in the additional terms if you're going to put anything there. Other than that, you just have the parties, the sellers and buyers, sign it and date it, and you could put the address of notice. Cooperating sales associate, so you put the buyer's agent here, the buyer's brokerage name here, the listing agent here, the listing brokerage name here, and that's the end of the contract. The only thing that I could recommend extra as far as here, usually what I like to do in my contracts is I like to write my commissions on the contract, even though it's in the MLS, and you could write the amount here. I've seen individuals write the percentage down here. What I like to do, just to make sure I know my commission's due to me, is I'll write it here, something like this. Let's say the commission is 3% for this particular contract. So I would write, seller will pay 3% of this subject contract's purchase price as a real estate commission directly to Nizz Realty Inc. So I would write something like this. Seller will pay 3% of this subject contract's purchase price as a real estate commission directly to Nizz Realty Inc. So that I know when it's been disclosed that the seller is going to be paying 3% of this contract's purchase price as my real estate commission. And you should write your brokerage name. You don't write your name as an associate or an agent, because the money is supposed to go towards your brokerage, and then your brokerage pays you. So you put the company name there. So this is one thing I could say as far as additional terms that I'd recommend writing. Even though there's very rare situations where if it's in the MLS, they're not going to pay your commission, I always like to have my commission in writing. This is just my professional advice and opinion. I like everything in writing, especially when it comes to the commission, because I need to make sure that it's been disclosed. This is the amount of money I'm expecting to receive, and it should receive, and there's no disputing it. It's in the contract. Everyone's signing this contract, so I know there's not going to be no problems once this closes, that this is the commission that I'm due, and nobody's going to try to do anything differently. So that's one thing that I could recommend that you do. Whether you write it here or on a separate addendum, write your commission in somewhere. And that's the as-is contract for sale and purchase. Now, the next thing we could discuss, let's go over some addendums. Let's go over the lead paint addendum. So let's pull that up, and then we could go over that there. So let's pull up a blank form. Lead paint. Lead paint disclosure. Yeah, let's do this quickly. So we have a little bit more time left on the stream here. So this is probably the addendum I see filled out incorrectly more often than not. More often than not, this is usually filled out incorrectly when I have realtors, whether I'm working with another realtor from another company and they're sending me the disclosure, or one of the realtors in our brokerage, they always send it to me for review, and I have to correct it because it can get a little confusing. There's a lot of places to initial, and usually someone always misses it somewhere because both the licensees have to initial it. The selling licensee should initial here, so it can get confusing, but it's really not that bad. So let's go over it real quickly. You put the seller's name. Let's just say the seller's name is Billy Bob. Let's just put a buyer name here. Put the full property address. So you put the property address there. Simple enough. Seller's name, buyer's name, property address. Now, all the buyers have to initial up here. All the sellers have to initial up here. That's the first thing you do. So everyone initials up top here, where these lines are. Moving down. Now the seller has to fill out this part here, part A. So the seller needs to initial part A and part B. A lot of mistakes that I see is they just initial part A and they'll skip over part B. Or they'll initial part A, part B, and none of these boxes will be check marked. You need to check mark these boxes and initial here. So the first thing you need to do with the seller needs to initial here in part A, and they need to initial here in part B. Once they initial both of those, now you need to fill out one of these two boxes for part A. So part B starts here where the blue line is. So let's just highlight part A part here. This is part A, what you need to fill out first. The seller either knows about lead paint or they have no knowledge of lead paint. They need to choose one of these boxes. Let's say for this particular example, the seller has no knowledge, so they're going to choose box number 2 here. So we check mark box 2. Remember, they need to initial part A and then check mark one of these two boxes. So the seller has no knowledge of lead paint. Part A is done. Now you need to do part B. So let's highlight part B here. So the seller has provided the buyer with all available records and reports pertaining to lead paint, or the seller has no reports or records. You check mark one of these two boxes. Let's say the seller has no reports. Then you check mark this box. If they do have reports, then you list the documents here of whatever those reports are, and then you check mark the first box. For this example, let's say the seller has no knowledge of lead paint and has no reports of lead paint. You check mark both of these boxes. Both of these boxes need to be checked. So you have to check mark a box for part B, and you need to check mark a box for part A. And the seller needs to initial in part A and part B. I've seen this get mixed up a lot where someone does an initial down check mark a box down here, leaves an initial missing. That's not the right way. If you're part of our brokerage, I always tell you this needs to be corrected because it's a liability issue and it's not worth it over checking a box or putting an initial there. Why put your license at risk or putting yourself in a liability situation over a check mark and an initial? It's not worth it. I know this addendum could be a little confusing, but it's important to do it correctly. So that's the first part here for the sellers to sign. So they sign part A, they initial part A and part B, and they check mark both of these boxes in both of these paragraphs, one or the other. So for this example, no knowledge, no reports, and initialed and initialed. Now for the buyer's turn. The buyer needs to initial part C. The buyer needs to initial part D. Even if there's no copies of anything, like this here, no knowledge, no reports, the buyer still needs to initial part C. You need to fully complete this addendum. Don't leave this blank. I've seen too many people that just put one initial in like part D and they think it's good enough for C and E. It's not. They need to, there's a reason there's different parts here. They need to initial in each one. So you can't just put one initial one place and think it covers everything. So they need to initial part C, the buyer. All the buyers need to initial this too. So if there's 3 buyers, you need to have 3 separate initials in all these parts here. So the first 2 parts, they initial part C and D. Then of course they're in your form simplicity. You have the protect your family from lead in your home pamphlet. You just give them you just send them a PDF file of that pamphlet. It's a pretty decent sized booklet that discusses lead paint. So you give that to the buyer. The next part that the buyer initials is part E, and then they're going to check mark one of these 2 boxes. Either box 1, where they received a 10-day opportunity to conduct a risk assessment or inspection for the presence of lead paint, or number 2, where they waive the opportunity to conduct a risk assessment. I've seen either or of these boxes checked. I usually always recommend that you know they have a 10-day opportunity to check for lead paint. But I've seen buyers that just say, yeah, I'm not worried about it. There's no lead paint there. Just I'm gonna waive the opportunity. I'm not worried about it. In that case, you could check mark that box, but you need to check mark one of these boxes. So let's just say for this example, they're doing what we recommended, is we're giving them the 10-day opportunity to do a risk assessment or inspection. So the buyers need to sign part C, D, and E, and you need to check mark one of these boxes. So as you can see, there's a lot of things to initial here. And I know I'm going through this slowly. It sounds kind of redundant, but I've seen this addendum messed up so many times, so that's why I'm going all over it thoroughly, because you need to fill it out properly if you are filling it out. It's not worth the liability over a check mark and a couple of initials. So a lot of places to initial, and if you just look at it slowly, you'll see where to initial everything and where to fill out. So part F here, this is for the listing agent to sign initial here. So the listing agent will usually initial here, and it's basically that the licensee has informed the seller of the seller's obligation, and that, you know, basically once you have the seller sign this document, then the licensee should inform the seller about their responsibility to disclose any knowledge they have of lead paint and so on and so forth. You could also read the statute and so forth here. So the listing agent will initial here, and there's still more to do. You have to have all the sellers sign and date, all of the buyers sign and date, have the listing agent sign and date this, and have the buyer's agent, also known as the selling licensee, sign and date. So everyone needs to sign this. The listing agent, the buyer's agent, all the buyers, all the sellers need to date it and sign. On top of initialing all of these things and check marking all of these boxes, and having the listing agent initial here, and having all the buyers and sellers initial up here. So there's a lot to do in this addendum, and that's why it gets messed up more often than not, because it's not just, you know, one spot to initial and maybe sign at the bottom. There's a bunch of things to check mark, and there's a bunch of initials required from many different people. So hopefully this explanation and tutorial has been helpful as far as the lead paint disclosure. It gets messed up a lot. It's not worth the liability. It's not too complicated. It just requires a lot of initialing and a lot of signing from multiple party members. So that's why it could get a little messed up or take some time to complete. But please complete it correctly. It's not worth the liability, and especially over something so simple. So yeah, definitely take care of that. As far as that, that's pretty much it for today's live stream. I was going to go into some other listing contracts, but you know, we've been streaming for a little over an hour now, I believe, and you know, we're starting to do this. I've just started to do these tutorial and classes. If you tuned in or you see this video on the replay on our YouTube channel, I hope this video was helpful. Feel free to comment. Let me know how it was. If there's anything that you feel could be improved upon, I'm more than happy to hear the criticism and make improvements. I'm going to be doing these classes and tutorials on Tuesdays and Thursdays, starting at 7 p.m. Eastern Standard Time, and do it for like an hour, maybe two, depending on how many people tune in and what's going on. So I hope these, you know, and it's free. Doesn't cost anything for you to come in and watch the video and learn about what I feel is important to discuss, go over certain contracts and do tutorials and just give my professional advice on things. And feel free to ask questions in the chat. If it's something I can answer, I'll be more than happy to answer for you. Other than that, yep, you know, I'd appreciate it if you subscribe to the channel. It definitely helps. It doesn't cost you a penny. It's just clicking the subscribe button, and it also lets you know whenever I'll go live if you hit the notification button, so you could see a notification on Tuesdays and Thursdays. Other than that, more information about our brokerage is in the description below. We pay all of our agents 100% of their commission, or your commission. And more information is on our website, NizzRealty.com. Feel free to give me a call for a free confidential consultation if you're interested in our brokerage, but feel free to read the description below or visit our website for further information about our brokerage. Thank you very much. I hope these tutorials was helpful, and we'll see you in the next one on Thursday. Thank you and take care.